Welcome to the Real Estate Reserve Podcast with your hosts, Jason Balin and Ian Horowitz.
What's up? What's up, Ian?
Great. I'm trying to figure out if you remember how to do this. You do remember how to do this.
Of course I do. Natural, baby. How's everybody doing? Welcome to the Real Estate Reserve Podcast. Today is Monday, July 20th. About 100 degrees out. If you are tuning in from some of the local areas that we're at, about 100 degrees out. So it's going to be fun, a little bit toasty. We're going to make this show very interactive. So if you have any questions, feel free to comment them below. If you're watching this on Facebook or YouTube or any other platform, LinkedIn, feel free to comment below. And if you want to hop on the show, feel free to do that as well. All you have to do is comment, say you have a question and you want to do it live, and we'll send you the link and you can hop on. If you don't have an individual question, we could start with that. Go get them, brothers. Mike, cool.
I got fans everywhere.
I know we had to start it off strong. So the reason that this is an interactive podcast is because, everyone's opinion matters, right? Everyone who has an opinion related to real estate investing of what they're currently seeing, I want them to share. And we think you can give us some good insights as well. The topic today is some insights on the flip, rental, and vacation market. Very, very interesting times here, especially in the areas that we focus on, which is Baltimore market, the Washington, D.C. market. My lending company, Harmony Bankers, does stuff in Pennsylvania and New Jersey and Delaware as well. Most of Ian's stuff is primarily in the Baltimore market, although he's got some investments in some other localities as well. What else you want to share before we hop in? Mr.
Nothing, man. It's hot out. Those of you that are firemen with me locally, today's a big day. We got union elections. We can get all this over and done with. So make sure you get out and vote early, often, as many times as they let you vote. But other than that, I'm glad to see you're back, Jason. I know you've been out traveling the world. I'd be interested to see, did you, when you got
traveling the world?
Did you, when you were in Florida, I know you chickened out because you were scared of the Rona. But I've been on a plane, and I respect you. So on your trip to Florida, though, what did the real estate market down there look like? I mean, was it any different, or did you not even entertain real estate while you were there?
I mean, I don't know. I looked on Zillow, and I saw what stuff sold for, the house we stayed in, what that sold for, and things like that. But besides that, I don't know if I understand your question.
No, I'm saying, did you talk to anybody about real estate investing while you were down there in
Florida? I didn't talk to anybody there. We hibernated to ourselves. I didn't talk to one person besides family members in the last 10 days.
So do you think that there's a viable business? Because I've always thought that there's a viable business in the vacation rental game. I never really got into it. I know like Pete and Mike Casey and a few other guys have some Airbnbs. I always thought it would be a unique business model, but who would ever thought, like, where we stay today, like what the climate is of today's real estate market. Do you think it's a viable business going forward?
Yeah, I mean, that's a good question. We were going to get to the vacation rentals after the flip and rental. Yeah, but let's just hop into it now since we're already talking to it. Let me put a few things on here. Make sure you share the broadcast if you enjoy this, and any questions that you have, feel free to comment them, and we'll jump in with your thoughts as well. I mean, I think the vacation rental market right now has absolutely skyrocketed. I think it is a seller's market for any beach property, lake property, getaway property. I think everyone can kind of attest to that. Right now, everyone's trying to, maybe not everybody, but most people that I know, I believe they don't think they're going to be traveling as much. When I say traveling, I mean overseas flights as much as before. So they're saying, hey, instead of taking that budget, let's put that into a vacation rental. Let's put that into a vacation house. Let's go get a lake house. Let's go upgrade our primary residence. Things like that. And again, I don't think that's going to, that demand's not going to be there forever, but I do believe that demand's probably going to be through the end of next summer. Certainly through the end of this year into next year. And the prices will tell. I mean, I look at The beach stuff that I look at and vacation stuff I look at is more on the Maryland and Delaware beaches. And I take a look at that stuff, and the average days on the market is skyrocketed. One house sells for whatever price is, and the next one sells or listed for higher and higher and higher. And that's what a seller's market. That's what a seller's market. I mean, obviously, it certainly helps how interest rates are. A buddy of mine just got quoted 2.325 or 2.5 for a 15-year fixed on a house. I mean, I refinanced. I told everybody I refinanced I was either at 3 or 3.125 in February for a 15-year fixed. Might have to consider do it again if I could do another no cost one, because it's a half a point to 6.625 cheaper, just like that. So I think that helps the vacation market. But I have a little different perspective on owning a second home and a vacation home than I think other people do. I mean, I had one for a while, and it was a rental, and we used it as well, but it never felt like a home. It never felt like it was our own place. It felt like we were just going to another rental property, even though it was ours, another vacation place, because there's certain improvements and things that are in there that differ from if it was your own house or somebody else's house, and things like that. So if I did it again and bought another vacation house in the future, it would definitely be more of, this is exactly what I want. I'm not going to share it with renters. It would just be a vacation house. It wouldn't be a rental house that we also went on vacation to.
Well, and I think there's an opportunity there that if you are looking for a second home and you don't really want to primarily rent it, I do agree. Interest rates are super cheap. Now, something that we discussed with Ryan Huck a few months ago, and I'd be interested to get him back on here, is that, a lot of people don't go overseas when this type of stuff happens. They vacation locally, and there's actually an uptick in the market in those type of vacation areas. So it'd be interesting to hear from him to see how like Ocean City, New Jersey's doing, or any other realtors that, work in the local vacation areas that we do, to see if there's an uptick in that. I agree with you personally. If I was buying a place, I would want to retain it for myself, for our family. But I'd be more interested to hear from the guys that actually do this as a living. Like I know there's Airbnb funds that you can invest in. People that are buying rental houses in locations near, attractions like Disney World, or, you buy a beach house and you're going to primarily rent it, to see what those markets are looking like. I have a feeling that your local beach markets are probably doing better, or your local mountain areas.
They're booming. They're absolutely booming right now.
Yeah,
there's no inventory.
Right. Whether you're renting or buying or anything. Now, I think guys like, that are buying stuff down in Orlando near Disney World, they're probably going to be in trouble for a hot second, or other theme park attraction types. I think people that bought stuff in those areas are going to be a little more difficult to combat what's going on with the current coronavirus, or that's come and gone, and we're on our second wave, or whatever new thing they're going to throw at us. So I think that I agree. There's opportunity. I think there's more opportunity in local vacation spots than there is the destination spots per se.
Yeah, no, and people are spending more time in their houses. I mean, think about it. When all this happened, contractors blew up with business, right? People were doing improvements and upgrades to their houses. Most homeowners in general, that's just what they were doing. They were like, hey, I've talked to so many people that, hey, I want to upgrade this, or I want to put a pool in my backyard, or I want to do this, or I want to do that. They want to spend, and I think they justified it by, now I have a few more bucks in my pocket. I'm not spending money on travel. I'm not eating out. I'm not doing these other things. So they're going in that direction. So again, a long-term plan, who knows? I mean, Mike Casey's a good person to ask, because I know with Airbnbs, like, he suffered for a little bit, for a few months, as that all stopped. But now that that's open, I know that his Ocean City rentals and his other spots are, completely booked. So, that's the sense. So that's the vacation stuff. Let's talk about flip and rental stuff, because that's, I think that's important. I mean, we talked about this on our Monday morning huddle with flips right now, because that's usually the types of loans that we're lending on. Hey, and we share this broadcast to everybody if you have not already.
Yeah.
Cool. So it's a seller's market. It's very, very simple. It's a seller's market. And at the same time, there's very slim opportunities for real estate investors. So it's a seller's market, but at the same time, you still got to find good opportunities. And the scary part is right now, is since it's hard to find good opportunities on the front end, everyone's kind of pushing that up a little bit, pushing that limit a little bit, thinking it's a seller's market and I'm going to be able to sell it for a premium today or maybe even more. So think about it like this. And we talked about this morning. Do the math. So let's say a good buy price is $100,000 for a property and a good sell price is $80,000. And obviously it needs renovations and there's costs and stuff like that. So what's happening is someone's buying it for 100, thinking it's worth 180, and stuff's selling for 190 or 200. So then the next person comes and says, you know what? I'm not going to pay 100. I need inventory. I need deals. I'm going to pay 110 or maybe 120 or 130. Well, guess what? That margin, right? So here's the start line of the purchase. Let me try to do this in the screen. Here's the start line for the purchase, and here's the end line, right? Am I going in the right direction? I don't know the camera yet.
I don't know if we're going up or down, but I'm following you. Let's go.
This is the start line, and this is the finish line. Buy price, sell price, right? And here's the equity in between. Well, what happens? And again, as long as it's a seller's market and it stays like this, we're all in a good spot. But what happens when you're buying here, right? And then all of a sudden you say, oh yeah, it's a really good time, really, really good market. I'm going to buy here. I'm going to buy here because the seller's market's going to be all the way up here and up here and up here. And then next thing you know, and interest rates go back up or stuff changes. And then the next thing you know, you're buying here and you're selling here and then you're screwed. So again, if there's any, it's hard to give advice in this. And we talked about this on risk factors for underwriting loans and how aggressive or conservative we are as we're doing our private lending in a market like this. Because, an outsider would look in and be like, it's easy to get out of your loans right now. Everything's selling for a premium. It's selling, but that's not going to last forever. And I think you got to be smart. I think you got to make sure there's still that, even though I don't think in the next few months that the market's going to shift backwards, I actually do believe now that it's going to continue to go up for a little bit longer. But I believe that as soon as the market not gets back to normal, but as soon as the market has a hiccup, that hiccup's going to wipe out the difference between everything, all the gains that have happened since March, plus backtrack probably another 10%.
Yeah.
Hopefully you're following along with me on that.
And I don't think anything is going to happen until I think November is kind of like the magic date where you're going to start to see stuff get real funky based on
election stuff.
Yeah, election stuff. I mean, a lot of stuff that's going on now, depending where you sit. And I don't want to make this podcast political, but based on your beliefs on what's going on with the coronavirus and other stuff, that your stuff's politically related and politically motivated. And the question, I know what's his name, Powell, right? He basically came out and said there'll be no interest rate raises for the next 2 years. So depending what your belief is, if you do trust that, then there is a chance that, this market lasts for 24 months. If you don't believe that what's going to happen and you think there's going to be other interference, that market could be cut off short. Our hard stop date is kind of November. That's what we're looking at. We're currently in the process of underwriting a deal that involves office space. It's a little difficult to wrap our minds around with everything going on. But where there's drama, there's obviously money, right? So when everyone's running, that's the time to run in. Back to flips, I do see a lot of people having major success with flipping, and I wish them all the best of luck. And I hope every dollar that they're making, they're stacking it up now, because that, like you said, it's going to shut off, and it's going to shut off overnight. It's going to be just like a light switch, and that's it.
Yeah, that's great.
Like, oh, we're coming down and we're landing softly. It's going to be turned off.
It took 10 years. It took 10 years to get to here, and everything can be erased very, very quickly. And I'm not saying it's going to continue to erase and go all the way back down. That's not what I'm stating. But what I am stating is, it takes 10 years to grow a market, and literally overnight, it can completely shut. And again, we'll see where it goes. Do I think it's going to be something majorly drastic? Probably not. But do I think that something will happen? Absolutely. And the ones who are really screwed are the ones that believe that they're buying with the speculation that the resale price today is going to be up here tomorrow, and then up here, and then up here, up here.
Yeah, no, I mean, look, a lot of us lucked out from 2012 to 2017 or 18 when that's what the case was. You could screw up and buy something, and it worked out for us, but right now, now is not a time to speculate. If you're new to the business, get in cautiously, and actually it'll help you long term over your career to get in cautiously, because you're going to learn real quick what's going on with the market. I do know with banks, not that we're on the rental properties yet, but I know banks are cutting back what their LTVs are, what their reserves are requiring, a lot of things. And, it all goes back to underwriting and all what your comfort level is and how can you manage, diversify your risk, right? So if you're flipping a house, know what your exit strategies are, know what your stop number is, try to plan for account for everything, account for a long term to hold it, account for if you need to turn it into a rental. There's plenty of things that you need to account for if you're flipping properties, because it's very easy to turn into an asset into a liability or vice versa. So make sure you're very careful with what you're doing with your flips right now. To me, I don't think the risk versus rewards there right now. I think there's opportunities in other locations that are way better. But as of right now, if you're taking that risk, make sure it is a calculated risk for yourself.
Yeah, and there are opportunities out there because I see them on the front end as we lend, and they're there. But they're the ones who have worked hard to try to get the right deal. They're not going to jump out in front of you, and that's how it's been for a while. Did you listen to the last 2 minutes of that family office podcast I sent you on Saturday?
No,
So listen to the last 2 minutes of it because it was very interesting. It was related to the office building that you're looking at, the concept of it. So what it was is we all think of the industry as a macro level, right? So it's real estate's good, real estate's bad, rates are low, rates are high. You can't find deals. There's tons of deals, right? So like the macro level of real estate and real estate investing, but everything's done in a super micro level. And the example that the author of Family Podcast used was, he stated it was about raising capital, and he's looking to purchase a shopping center. And a lot of people on the capital side were like, why would you buy shopping centers right now? Shopping centers, no, maybe it was either shopping centers or supermarkets, I don't remember. But he's like, this is like the worst time. It's like, well, on a macro level it is, but on a micro level, the numbers are great and they make a lot of sense. So why wouldn't I do that? So that's we got to all look at on the real estate side. So in general, it's very hard to find good opportunities. That doesn't mean you just get out of the business. That means you find the right deal. I mean, when you think about it like this, and this is another example of what we used on our Monday morning huddle with our whole team related to underwriting loans, and you can just relate this to underwriting real estate deals in general. Every deal that you invest in is your own individual business. You got to think about it like that. Every deal is its own business. Today you might pay 100 for it. Yesterday you might have paid 90 for it. Tomorrow you might pay 110 for it. Tomorrow you might pay 90 for it. Whatever the case is, it's your own individual deal. It's your own individual business. So you got to think about that for each deal. And that's how we do it when we underwrite loans. We're, is the client that we're lending money to, do we want to be in a partnership with them where we think they can repay? Do we think that they can execute? Do they think that they can do well on this project? So each project stands by itself. I mean, we were lending aggressively in 07, 08, 09, 010, just after the crash. And there was great opportunity. There was great opportunities then. There's always been great opportunities. There's always been bad deals. There's always been good deals in every market cycle. Should we jump into George's question real quick, Ian?
Well, I think that point goes right into George's question.
Okay, George, what about leveraging existing rental properties into I guess new rental properties, especially if rents come down, try to steal some properties, adjust for rent decreases? Why don't you hop in on that first, Ian?
Well, let's go with the second part of this question first. If rent, leveraging in, or buying rental properties because you think rents are coming down, and I'm guessing you're basing it on an NOI basis, not a value basis, and, are you going to get a deal? Absolutely, relatively speaking, right? The question is, are those rents going to go back up? Most likely. But there's actually a deeper question and a deeper point that you potentially need to understand, is that rents can only come down so far, because guess what? Property taxes have risen, operating expenses have risen, water utility bills have risen. They have all risen alike. So for rents to come down in a sharp, drastic measure, unless you're in an overinflated market, that's going to be tough for it to say to go from $1,000 to $500, because guess what? The property owners still need to be able to pay all their expenses, just like any other business. They're not going to go and take losses against that and not pass it on to the tenants. So do I think there's an opportunity for rents decreasing? Maybe. Do I think there's an opportunity where landlords have been involved in the game for a very long period of time and they're too scared to lose tenants and they stay at status quo and rents continue to rise at some point and they don't follow that rise? I think there's an opportunity there in the next 12 to 24 months. But it's a great way to think. I don't discount what you're thinking. The likelihood of finding it, I think, is going to be a little bit harder. At least in our local market. I'm sorry, George. I'm not sure where you're from. Maybe where you are, you're in a market that's overinflated, and there's potential for that. Say like a San Fran, where they came down by like 30% overnight because everybody's moving out because they're all teleworking now, and the demand's gone. Now, the first part of your question. Me personally, sure. If you're in growth mode, I absolutely believe in leveraging up your portfolio to grow to the size that you want to. But at a certain point, and we're starting to get to that point, Brooklyn, if you're talking about Brooklyn, New York, then I believe you're probably in a market that is decreasing and you have a chance. If you're talking about Brooklyn, Maryland, I don't know about as much. But Brooklyn, New York, I would assume that there's going to be some rent adjustments. Now, for leveraging your portfolio, as long as you're comfortable doing it and you're not over leveraging yourself, and which I think right now the banks and lenders are going to be very tough on you. It's going to be hard to get over leveraged. I think it's a great opportunity to lever up and go if you're willing to grow and you're willing to take on that risk. Just remember, you're going to have additional costs. What's going to happen to your portfolio? You have added risk. We're starting to get to a point where we try not to lever up as much. We try to utilize different resources or, paying down loans rapidly to help ourselves out, because we're starting to realize the risk that we want it gone off of our plate. So, but if you're willing to deal with that risk, absolutely lever up and go. And I think now's a great time because it's going to be hard for banks to let you to get hurt because, you're at a 65 or a 70 LTV with a huge debt service coverage ratio and potentially some sort of debt coverage escrow, so.
Yeah, and also because the interest rates are lower right now, it makes sense to do that. I mean, if you're in growth mode, you have to leverage up. I mean, that's just it's too hard to, it's going to be too hard to grow kind of the scale to do that. There's also an argument of, are you getting the deals at the numbers that make sense to you as well? It depends on where you are and where you want to be. I mean, if it's like, hey, I'm going all in on rentals, like this is going to be the game plan, and I'm gonna grind hard on it. I think, yeah, you leverage up. You probably aren't going to buy the best deals because, I mean, there's deals out there, but they're not like the cream of the crop. I think if you have a 2-year window or so, you could probably get some cheaper deals as things kind of potentially come down. But again, there's nothing wrong with buying a rental that works, right? Just like anything else. Could it work better in the future? Maybe. Does it work fine now? Yeah, absolutely. I mean, when we did on some of our rentals that we had a 5-year term loan on with one of our banks, we just did a renewal and the interest rate went down like a point because the rates were significantly cheaper. So, it made sense to do. It was in like the low to mid 5s, the low to mid 4s now. And my model is similar to your model, Ian. Like, I like having lower leverage. I mean, back in the day, I wanted higher leverage on these things because it gave us less cash out of pocket. It gave us the room to do more and more projects. But as you have a mature portfolio, it feels good to have more of an equity position in it and less debt on these projects.
From a mature.
But again, but you can't do that. That doesn't happen overnight, right? You need to do that over time. The other thing to think about that I feel like a lot of rental property owners are not thinking about because they're just thinking about growing and scaling and doing more and more and more. I mean, I'd highly look into selling good rental properties right now because there's a demand for them and you can sell them for a premium. One of the reasons why we've sold a bunch of our rental properties is because I do the math, I look at the numbers, and it'll take me a long time to recoup some of that stuff, especially if I'm getting a premium. So like, for instance, let's say we're into a rental property originally at like $100,000 on like a 130 value, right? Give or take, and it cash flows, and we get a few $100 a month or whatever, and then all of a sudden, we're in a market like this, and I could sell it as is. Let's say we have a turnover, right? And we either have turnover costs of a few $1,000s, or you put a little bit more into that, and then you make it look nice, and then you sell it, and potentially you sell it for like 179, 169. Very similar situation to some projects that we had, right? You're making that $30,000-$40,000 based on more than what you had paid for that property. Might make sense to do it, right? Obviously, you want another investment vehicle to put that in. It's long-term capital gains if you have it for a longer period of time. So that's nice. But to us, it made sense to sell some of our rentals as they turned over, because our cost to go into them, it was either like, okay, I'm going to put a few $1,000s as turnover costs in, or I'm going to put a few $1,000s and put them right back on the market. So I think in general, it's definitely something you should consider as your rental properties are turning over. Hey, do a little quick analysis on it. Does it make sense? Does it make sense to just sell them right now instead?
Yeah, absolutely. If you're going to make $400 a month, and that that's if everything goes exactly right, and that's $5,000 a year, how long does it take you to make that same $70,000 back that if you popped your equity? There are some nice things with opportunity zones, 1031 exchanges, and monetized installment sales. There's a few ways to get around taxes that, because in the end, you're going to obviously reinvest that money. Question is, what are you going to reinvest it into? So yeah, man, I think, as we've been cautiously optimistic through this whole time, this whole period, it just seems like the market has been relatively stable. It was very scary in the first few weeks, first few months. I guess I don't know how many months we're in now. I think I remember, what was it, March something that we were discussing all this. So it's been a few months now. But the market stayed locally here in Baltimore, DC, Jersey, and Philadelphia, that the market's been pretty consistent, if not on an uptick, which has been surprising comparatively speaking. If you would have asked me what happened on day one, however many days ago, 120 days ago, or 150 days ago, what do you think would have happened? And Pete, who would have thought during this whole coronavirus people would have missed us? But we're back. So anyway, with that being said, no, man, it's a good market. It's been busy for all of us. We all been, put our heads down and grind, but the market stayed pretty consistent. And I think it's been an advantage to all of us that have gotten involved in the market over the years. And it's actually a nice sign to see what has happened, that we didn't get damaged like we all thought we were going to die, right? So it's been nice to see.
Yeah. Yep. I mean, I would leave it like this. If you have current inventory you're working on, I think you have a lot of options. I think you could potentially get bank funding still very readily available. You could probably sell it for more than you could have sold it for a few months ago. So this is a rental, this is a flip, this is just whatever existing property that you have, right? So look into that before you make any kind of moves. If it was a rental property, you can sell a property. If it was a flip, hey, you want to turn it into a rental, you can do that as well, right? Like, you have flexibility to do that. You're not going to have flexibility like that forever. So I would look into that. And on the front end, on the buying side, deals aren't going to jump out on you, but there are opportunities. I promise you that, because I see them with leads and doing loans for real estate investors locally every day. They're out there. They're not going to jump out at people, but they're there, and I see them. And the same old school techniques that people were buying deals from before still exist. People are still buying stuff on online auctions. People are still buying stuff on MLS. People are still doing, old school door-to-door sales, working directly with sellers, getting referrals from past clients, things like that. The opportunities are there. So cool. What else you got to add before we hop?
I don't have much to add. Glad to see everybody's back out here. Make sure you're taking action. Do something each day. It's been really exciting. We got some fun upcoming projects for anyone that's interested. Working on a really cool office development deal. And again, maybe it's something we can case study. Maybe Thursday we can case study the apartment building that we just picked up that I know a few people got involved in. a few people that regularly watch this show got involved in on. So maybe we can cool. Thursday, let's do that. Let's do a case study. It's been a while since we've done one, and I'm always happy to share everything that we got going on. So let's do that Thursday. Unless Sean Magner, you're out there, you want to jump on here. Pete, you want to jump on here? I know you're still working in that warehouse. Love to talk to you about vacation rentals, and go from there.
Cool. All right, guys. There's no more questions. We will we'll hop and check you guys all later.
Sounds like a
Thanks
plan.
again, guys. Take care.
I don't know how to end up.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.